Good evening, and welcome to the Nightly Market Brief for June 15th. Tonight, we are looking at the major headlines that drove the markets Monday, giving you a clear picture of what's fueling volatility as we head into Tuesday. The biggest story on the board was the ceasefire agreement between the U.S. and Iran to reopen the Strait of Hormuz. That news instantly took the pressure off the energy complex. Crude oil and gasoline prices tumbled as traders rapidly dumped their war premiums. This sudden drop in energy costs immediately cooled down global inflation worries and pushed Treasury yields off their recent peaks. On CME FedWatch, the market odds for a December interest rate hike dropped significantly ahead of Wednesday's Fed meeting, the first for its new chair, Kevin Warsh. The geopolitical relief also took some steam out of the dollar, causing the greenback to move lower. The weaker dollar, combined with lower interest rate expectations, acted as an absolute launchpad for alternative assets. Capital rushed into crypto, sparking a major rally in Bitcoin and Ether futures. We saw that same risk-on mentality in the stocks. Large-cap tech and AI sectors led the charge, with NVIDIA breaking through major valuation thresholds and SpaceX catching a massive wave of momentum on its second day of public trading. Precious metals had an absolute historic run as institutional investors aggressively flooded into safe havens. High global government debt continues to keep large funds structurally bullish on gold and silver as essential portfolio stabilizers. Industrial metals like copper also caught a heavy bid, fueled by the massive infrastructure demands of the AI data center boom. Finally, the agricultural complex turned in a quiet, divergent session. Falling crude oil prices heavily dragged down corn and soybeans by reducing the demand for biofuels, which triggered heavy fund selling in the grains. Excellent Midwest weather and rapid planting speeds also helped eliminate early-season crop premiums. On the other hand, the soft commodities split away from the grains entirely. Coffee pushed higher due to harvest delays and unseasonal weather risks, while cocoa gained ground on the back of the weaker dollar. I'm going to hand it over to Alex now.
Thanks, Michelle. As traders, we know that markets can change directions in the blink of an eye, especially with the Federal Reserve meeting coming up on Wednesday. That's why we don't fall in love with a single story or try to predict the headlines. Our job isn't to play prophet, it is to follow the trend and protect our capital. To handle this kind of volatility, you have to be prepared to trade these markets both long and short, and you must have ironclad risk controls in place before the opening bell rings. For our long-term positions, our desk relies heavily on protective collars. We write an option contract at our exact profit objective, then use the collected premium to purchase an option to define our risk. This mechanical overlay is completely premium neutral, meaning we're collecting as much time premium on the option we sell at our target as we spend to define risk. More importantly, collars make you immune to being stopped out, and as an added bonus, reduce your margin requirement to the exchange maintenance margin, or the maximum risk on the trade, whichever is less, all without wasting precious investment capital on net purchases of option time premium. Best of all, our team handles all the daily grunt work for you, monitoring account risk, placing the entries, and automating the entire pipeline using Chart VPS and CQG integrated client through premier exchange members worldwide. When your account is held directly at an exchange member, your funds are fully segregated and protected under exchange rules, plus or minus your regular trading activity. That means you get unmatched regulatory safety, total price transparency, the strategic ability to use United States Treasuries to satisfy your margin requirements, and guaranteed liquidity back to your account within 2 to 48 hours in any major currency. We have laid out trend qualification rules on our EMA analysis page, so you can see the logic for yourself. Contact us if you have any questions or would like us to walk you through any of the top automated trading programs. Please note, due to regulatory jurisdictions and minimum financial requirements, we may not be able to accommodate your account. If we're unable, we can refer you to a fully licensed broker in your regulatory jurisdiction who can. Good trading, and we'll see you right back here after tomorrow's settlement.